Gasparino and Dagen McDowell are both here with us in the studio. I want to talk about this Bob Shiller piece in a moment, but Trump wants to, Charlie wants to
lower taxes. Everybody's taxes.
No, he wants to raise taxes on the hedge fund managers.
The hedge fund managers.
Just, you got to stop this.
Because you know why? They don't support me. They support Jeb. So I'm raising their I will say this. This is why he wants to raise taxes on the hedge fund guys, from what I understand. That he has told people that the reason why he's going after them is purely political. Of course. Because they're all supporting Jeb Bush, and to some extent, I guess Anthony Scaramucci is supporting, he's a hedge fund guy, our Fox News contributor, runs Skybridge Capital. He runs a fund of funds. He's supporting Walker. Donald says he wants to go after them. Now, here's where I think it's going to be kind of interesting. Does he really look to raise taxes on hedge fund managers? Because if he gets the nomination,
okay, and he's not really talking about income taxes on hedge fund managers, is he?
Who knows? He's so unspecific. It's
a populist position, like many of his positions.
Yeah, but remember, if he really wants to run for president, he's going to have to raise a few bucks. And the hedge fund managers are they going to just give all their money to Hillary Clinton? It's possible if he goes after them for just because he doesn't like the fact that they're supporting Jeb right now.
How does a billionaire seem like an everyman? You talk about the middle class. You go after hedge fund managers. And he's talking about, I'm going to help the middle class. Well, we talk
about Trump all the time.
But I just want to say
quick, because I want to talk about Shiller, too.
I know, but I want to say one thing here. I mean, Donald Trump goes out there and attacks the head. You know, I know how they make their money and how they're taxes.
Right.
How they're taxed.
Moving money around.
Moving money.
You don't make anything.
Moving papers around. I know how they're taxed, too. I know how they're taxed. You know, they're not the only people that have loopholes. Don't real estate speculators like him, engage in all sorts of financial loopholes?
Let's talk about the Shiller article that was in the New York Times this morning, because Dagen interviews him on this show, and she was in for Neil
Tuesday, I think.
This week, right? And it's interesting because he's Bob Shiller, in case you don't know who we're talking about, Case-Shiller Index, and a famous economist.
Nobel Prize winner.
Nobel Prize winner, that's right.
Is he the guy at Long-Term Capital?
What is this going on here?
No,
you're thinking of...
That was Robert Merton.
Yes.
What is this, a trivia show? Here's what Shiller had to say to Dagen, and then we'll come back and talk about it.
We know a lot about economics around
It's important. It's a statement for bitter boomers. Here's Shiller.
Tendency around much of the world for high-priced assets. It's like a general phenomenon. And at the same time, when we talk about secular stagnation, I think maybe they're related. There's something about the psychology right now.
So, the psychology, Dagen first. I mean, his Times piece was entitled, Charlie, get your phone, Rising Anxiety about Stocks Being, quote-unquote, overpriced. And I guess he has his formula for figuring it out.
This turmoil has a different edge to it, according to Bob Shiller. That could change the reaction in the market, but also stocks look overvalued, according to Bob Shiller. This is even as of Tuesday. And he said stocks look overvalued, real estate looks overvalued, bonds look overvalued, but he's most worried about stocks.
Now, if you read the column that
I read it too.
You read it too. Okay, so the column was pretty interesting because he parrots George Soros about the psychology of the markets and how a tweak, a slight change in the psychology markets could lead to a bear market. And I will say this, as I'm not saying we're there yet, but there is a growing consensus out there. You see it in financial columns in the New York Times and elsewhere that the market is overpriced, that the PE ratios are way above.
And Bob has his own,
and he has his own
way of calculating.
Which is a modified. We don't have to get into all the details on that. It reminds me of one of the advanced sports statistics that we have.
PE ratio is a way to measure whether your
but he has a modified version of it that he's come up with. A modified price to earnings ratio, basically. And the bottom line for the numbers on that, according to his column this morning, it was higher in the summer, right, than it's been in a long, long time.
Right.
Which
and
is what
if you watch this program, he told you exactly what it was on Tuesday.
What is the average?
What
is the average PE ratio right now? It's like 20-25%.
Based on his calculation?
No, the regular calculation.
I don't know.
I think it's at a it's at a pretty high level, and it's higher. And that's what. Now there are lots of reasons for that. Why is that? Well, when you have 0% interest rates, people buy stocks, right? So it's not just stocks are overvalued for other reasons. There's a lot of reasons why. Strong dollar, you name it. Lots of reasons why the U.S. stock market is at where it is right now.
Let's go with Shiller's numbers just for the purposes of this discussion, right? Okay, so he has this ratio. He says between 1881 and this year, his ratio, CAPE, I guess, whatever he calls it, it's 17. That's the average. In July, it was 27.
Yeah.
Right.
So, I mean, it's way above those levels. And he says that hasn't happened. It's only happened like a few times.
Here's what scares me about this market. And I called it masturbatory the other day because I think there is that. There's a thing there where it's self-indulgent and it's not based on reality. Okay, when a Fed governor, New York Fed Governor Dudley comes out and says, maybe we shouldn't raise rates, it just creates so much euphoria. That makes no sense. We should be moving on, especially now, years after the financial crisis, on much more fundamental factors.
And the thing that is bothering, really quickly, what's very worrisome, stocks, bonds, and real estate overvalued, according to Bob Shiller, which means you got nowhere to go but under the bed.
Gold.
Gasparino will be back for Bitter Boom. Of course, Dagen's not eligible for that segment, but I'd be happy to be the monitor.
Oh, but I'm on to talk about ETFs.
Lieb,
so you know what I mean?
Steve Lieb loves gold.
I know. I can't wait to have this. I've really been looking forward to this. That's why I'm so happy to be here today.
Gold teeth,
get dressed up for this.
Steve Lieb loves.
Now,